Welcome to Man in America, a voice of reason in a world gone mad. I'm your host, Seth Holhouse. Today, we witnessed what many are calling a black swan in gold and silver. I'll pull up this quick tweet here to give a quick overview of this. Now, I'm recording this on Friday, but I'm publishing on Saturday. So if you're seeing this, it's on Saturday. So this is from yesterday, which is Friday. That makes sense. Okay. So gold and silver, as of what we're looking at right now, actually, I'll pull up the quick silver price. Silver is at $84.36 an ounce, down $30 or 26% today. Holy cow. Okay, here's a tweet outlining this, saying gold and silver black swan, gold down 15%, silver down 38%. Silver got down even to $75 an ounce today from well over 100. It was wild. So this guy says, in the past 24 hours, 15 trillion plus has been wiped out from gold and silver. That's half the GDP of the U.S. gone in one day. We just witnessed the first Sigma 10 event in financial history. Mathematically, this shouldn't happen in the lifetime of the entire universe, right? With 15 trillion being wiped out in one day. But he says here, this simulation is literally breaking. And that's something I want to hone in on. So my guest today, Micah Haines, is one of the guys over at Noble Gold. He's one of like their best reps there. He's an investor. He understands the market inside and out. And so on today's show, what we're going to be looking at is, first off, what on earth just happened? What does this mean? Why are we seeing this insane volatility in precious metals? And not just the drop today, but I mean, we're seeing almost every day, it's like up 10, down 5, up 14, down 12. It's been wild. And so you have to ask yourself, like, what's really happening? Now, I think a lot of it, as we'll be discussing today, is tied into the LBMA, the COMEX, the paper market, because I think fundamentally the silver and the gold markets are breaking. And what do I mean by breaking? Well, it's like, okay, what makes those markets? Well, since the 70s, what has made those markets has been this Ponzi paper scheme that the European banking system, the City of London, they have concocted this mechanism of using the LBMA in London and the COMEX in the US to manipulate the price of gold and silver through contracts, through ETFs, and basically through, it's to simplify it, it's like on one side, it's like if you see paper, the silver is going up too much, they're going to flood the market with paper silver. On the other side, they're going to do the opposite. So they've been able to use this mechanism to create these unnatural imbalances to suppress the price. But what's happening and what we've seen over the past couple of months is that the price difference of what's being established through these paper markets in the West is actually, it's breaking away from the prices that we're seeing in the East, whether it's India or China or Japan. We're seeing that the difference between the price here, the paper price, has been greatly shifting and pulling away from the physical price is what we're seeing over in Asia, right? The Shanghai Gold Exchange, the SGE in particular. And so if you take a big step back and ask what's happening, the way I look at it is that there's like this tug of war going on. And the tug is coming from Asia, from China specifically. It's pulling the price up because it's actually representative of the delivery of real physical silver. Yet this Western system is doing everything it can to keep pulling that price back down. So you're seeing it go up and then down and up and then down. But at a certain point, that breaks. It's like if you're playing tug of war and the rope can only hold so many people on either side of it. And eventually, as it goes back and forth, the rope itself starts stretching and fraying, and it snaps. And I think that's what we're seeing. And so in this tweet, when this guy says this simulation is literally breaking, I think that's what we're seeing. But it's actually incredible. Like, it's kind of scary if you've got a lot of your assets sitting in silver like I do. I'm looking like, oh, okay, like that's a big loss in a day. But that's not how I'm looking at it, though, because I'm like, okay, this is part of the process, and this is showing me that the market is finally correcting in a really healthy way. It's getting back to what it should be because it's been suppressed for decades. And so we're seeing this real price discovery, and there's going to be the volatility in the process of that. And so today, Micah and I are going to be digging into what's happening, how does it tie into the Shanghai price, the LBMA, the COMEX, what does this mean, where is it going? and so much more. So I think you're going to really enjoy this interview. Micah is very intelligent. He's really kind of soft-spoken, easy to talk to, easy to listen to. So yeah, please enjoy this. Before we jump in though, I want to thank all of you that are watching the show on Rumble. Thank you for supporting a free speech platform. The guys at Rumble are amazing. Their commitment to just allowing people like me, that I'm censored almost everywhere, yet on Rumble, I'm not. And I love that. So again, if you're watching on YouTube, stop feeding the beast, right? Come watch on Rumble. And if you're watching on Rumble, thank you. Make sure you hit that like button. Make sure you leave a comment. Let me know what you're thinking. And just, enjoy the show. Thank you. Micah, man, it's good to have you on the show. This is our first time doing a show together, and I'm really looking forward to this discussion today.
Yeah, thanks for having me on. I have to say, just out of the gate, Seth, like after working with you and your audience for many, many years, some of them are my best clients. I'm honored to be on, and yeah, just looking to kind of inform everybody about what's going on. Very exciting day today too.
Yeah, it's exciting is a good word for it. It's kind of like
understatement.
When you're on a roller coaster and it starts going, but it's almost like a roller coaster. We don't really see where the track kind of curves back up, and you're like, okay, how long is this free fall for? So before we jump in though, and kind of digging into that, so you are with Noble Gold. You're one of my, you're the show sponsor that has allowed me to do this almost from the very beginning. Like early on, Colin, your CEO, reached out to me and we got talking, and literally Colin has been one of the big people that's helped me stay independent, not be controlled by any kind of dark money and everything, and just keep pumping content out. So, thank you for what you guys have done, but I'm just looking forward to this discussion a lot, actually.
Yeah, me too. And like I said, Seth and Man in America have been such an important part of our business for so long, like years. I've been here 5 years, and I think as long as I've been here, I've had great clients that have come through your platform. So thanks to you. Thanks for doing what you do. And thank you mostly to your audience for supporting you and us along the way too. So yeah, quite a journey over the last few years to where we are now. We'll cover some of that, I hope. And then obviously it's going to get really, really exciting too moving forward. And I will kind of lay a bit of groundwork and create a bit of a roadmap, I hope, for the channel today. So take it away with whatever you want to dive into.
Yeah, well, I'll start with pulling up I think a tweet that really highlights what happened today. It says gold and silver black swan, gold down 15%, silver down 38%. So in the last 24 hours, this is crazy. In the last 24 hours, 15 trillion has been wiped out from gold and silver. That's half the GDP of the United States gone in one day. He says, we just witnessed the first Sigma 10 event in financial history. Mathematically, this shouldn't happen in the lifetime of an entire universe. The simulation is literally breaking. And so you see those price charts there. I'll pull up just a live price chart. So here, currently, now we're recording Friday into day. This will be publishing on Saturday. So some things may have changed by the time that this publishes and when people are watching or listening. But so we're looking at silver at 83.64 right now, which, say 3 months ago, if you told me, hey, silver's going to be at 83, I'd be like, holy smokes, that's amazing. But if you look at what's happened in the last 5 days, or actually let's look at the last month. So literally 1 month ago, December 31st, silver was at $70 an ounce. It climbed up. Then yesterday, actually, let me go back into 5 days. So yesterday we saw it hit up to almost 121. And this is what was kind of crazy. I'm sure you have the same sentiment, is that it just seemed like every day I'm checking, it's up another 10%. Like it was going up in a wild way. Like you look at this, right? This is looking at just like every day it goes from 96 to 101, 101 to 115, back down to 105, back up to 113. It's been wild. But then today we saw just a massive drop from opening. Came down. It looked like it bounced around 75, which was wild.
That was the low. Yeah. The 38% that's quoted in that tweet was from the very low. Now it's like 27%, but still, absolutely wild. Yep, you're right. It's been crazy.
It is. And so I've got so many questions about what you're seeing. And I guess, and I want to let you talk because I really do. I'm just going to frame it a little bit more. So as I'm seeing this, I'm actually calm. Right? As much as it's like, oh my gosh, like there goes a good chunk of my portfolio is like, it's okay. Cause like I see the bigger picture and I'm thinking, okay, when do I start buying? right? Because I'm looking at it, so I'm like, okay, it's at 81. Like I almost pulled the trigger on like I think it was a couple hundred ounces at 81. I had a chance to buy. I'm like, okay, I'm just gonna wait. But this, as far as I understand, this is kind of to be expected. Like it's like remember when silver went up to like 55 an ounce or so, and everyone's talking like, is it going to hold over 55? And then all of a sudden it dropped back down to 45, and everyone's just kind of like, oh my gosh, it's over. The crash is happening, and it came back
that's
up,
the top.
right?
Exactly. Yeah. So sorry, I'd love to just kind of riff on that,
Yeah,
right?
please
So
jump
it's
in, man.
been
Yeah.
wild. It's been wild. And just a little bit about my like, yeah, I've been here at Noble Gold 5 years, but I've been buying for 8 or 9. I've been buying silver since 12, $13. I, as a longtime believer that fiat, would fail and we eventually go back to a gold standard and, all those things that I think a lot of us kind of precious metals bugs hold and think are, truths, and they are. I'm in a little bit of disbelief the last 6 months that all this stuff is happening now after years of accumulation. It has been insane to see the types of moves that we're getting out of silver. And like you said, at 50, there was a lot of doubts that we would crack it. Thinking we would just be range bound below 50 forever, like the two previous highs. And since then, and like just this week, like you said, $120 silver, we have actually not had any consolidations or any corrections. I do a lot of technical analysis just to support my own investment. Like, I look at my own stuff. I want to know what's going on. And for me, it's a bit fun to look at charts and try to ascertain, where are things going. But a lot of the normal rules around things being overbought, meaning they've gone up too far too fast, and that's usually suggestive that it has to, come back to earth at some point. That stuff has not worked. And since 50 or 60, everyone thinks that there's going to be a pause and a pullback. And, dealing with my 1,000+ clients and new potential clients every day, everyone's been kind of waiting and a little bit in stasis, or almost in like left kind of in the dust by how quickly it's gone up. But now all my clients, and I like to, like I said, a roadmap, I like to kind of give them a sense of what we can expect. We can't control the market, of course not, but the better that I can prepare you for the things that may or may not happen, the better you'll eventually be able to deal with these things that do come a little bit out of the blue. But I've been saying for weeks, hey, if we doubled in the last 2 months, please do not be shocked when we pull back 20 or 30%. In fact, we want that to happen at some point. Nobody wants to give back gains. No one also wants to buy yesterday and have it drop 30% today, of course. That's not great, but longer term, the thesis is intact. We'll talk about that stuff. But I didn't expect 30, 20, 30 in one day, but I've been telling everyone, just be prepared. Right now, we don't trade our physical. We're a bullion dealer, so we just deal with the physical commodity itself. They're not meant to be traded. We don't really want to be tactical. It is a great investment. Actually, it's the best performing asset class across the board. There's nothing that's doing better than gold and silver. But the primary function of physical metals is like safety, right? It's you're out of the dollar, you're out of the bank, no counterparty risk, no currency exposure. So those are the reasons you need it. And I've been saying for years, you need this stuff. Now people are just starting to come to that realization. This dip today, before we interviewed, I just placing deals all morning. It's being heavily bought. We might have to resolve this over the next few weeks and come out of here, but this is just, I think, also a sign that we'll get into this, I hope, that paper manipulation and the COMEX liquidation of, not real silver is part of this as well, why we're getting such a big drop. So, yeah. Hope that's helpful a little bit.
It is. And so Jesse, are you familiar with Jesse Colombo? He has the Bubble report.
I love Jesse. I've been following him for years. Yeah. He's got a great platform. Yeah, on Substack.
He does. And
awesome.
I remember when, I think it was back, let me pull up this chart again. I think when silver was approaching like that, once it crossed over 50. And I remember, because I've been covering this in depth actually for years now, but I remember him talking, and I'm not going to try to find it right now, but basically what he was explaining is that there's like a volatility index, right? And that when you're looking at the volatility index, and you're seeing that when you have it to be very volatile, but also when you have these very volatile ups, right? 20% or say 10% day after day, like that's volatility, right? That's not normal. And so what he was explaining, again, this is maybe like back in October time, was that what you want to have happen is that you have to have it drop back down. That pressure has to blow off because it has this pressure that builds and builds and builds and carries it up. But it's almost like it then has to go through a period where the pressure kind of blows off a little bit. It comes back down, it resets, and then it prepares for the next buildup. And so I think that it's easy to look at this and think, oh, wow, silver's up like 10% every day. Well, at this rate, it's going to be at $200 an ounce by the end of January, or by the end of February, or whatever it is. But I think it's really, I think a lot of people that are more seasoned are looking at this and they're saying, yes, this is what we need. This is actually what is kind of natural in terms of like the laws of how these things work. Now, I do think it was very unnatural, which we can get into that, like the Shanghai price and what the COMEX is doing. But I think that what it is, though, is it's kind of blow it off. And maybe that, say, even though it dipped down like that 75 briefly, maybe around like 80, 85 is now the new kind of bottom for it to start building again. And so it's like, if you want to see, like a lot of people are talking about saying silver's going to hit 200, 300 by, say, end of Q1 or Q2, this is part of the process for that. And so like that's also part of it. Is it's like, for all the people that own silver and that are watching this and think, leading into this show, they're thinking like, oh my gosh, I just lost $200,000 on my portfolio. It's like, hey, it's okay. You gained $500,000 in the last 6 months. So this is part of it. And what's you're much more technical than I am, but what do you think about that?
Totally. Yeah. Technical analysis is fun, but most people don't care and they don't want to get into that stuff. But what I would just like to cover, and you hit on it, it's right. It's like normally the price of something is kind of stuck between like a floor and a ceiling. Okay? And this is called support, like that's, what is acting as a floor and keeping it in place. And then there's the ceiling, which is resistance. And the price just floats between the two. One of them eventually breaks, right? So if the floor breaks, then it drops. And if the ceiling gets broken through, then it's going to go find a new ceiling somewhere. And we thought after 50, it would have to maybe retest it as like a floor that's sturdy enough now to make higher moves. And, like I said, like every $10 increment, 50 to 60, 60 to 70, 70 to 80, we just blew through all of them without really ever coming back to the previous. And so when you end up with these big gaps between, what was previously a ceiling and is now we need to see if it will actually act as a floor. Yeah, it's difficult because 80, where we are right now, like 82 and change as we speak. But when we were under 80, I said, guys, if 80 breaks, we're going to 100 pretty fast. Okay. And I said 100 might be a big ceiling for us because it's a big round psychological number, but we could also go through 100 and get into the 120, 115 range. And like I didn't actually expect to be so kind of bang on. But now that we have gone through 80, broken through 100, gotten to the 120-ish range, like we might have to come all the way back to retest 80, and that's actually what looks like it's happening. And these are, as you say, very constructive parts of a bull market. You don't want to go up in a straight line, right? A bull market should be 2 steps forward, 1 step back, 2 steps forward, 1 step back, and it grinds sustainably higher. Bull markets always make higher highs. What I'm telling clients who bought in the last couple of days who feel now we're in a bull market, it's going to recover. I can't tell you exactly when, but I don't think it's very long. Along the way, we will have these pullbacks, which are natural and constructive. You need it in order to, as you say, reset price, momentum, retest what was previously a ceiling as now a supportive floor, and to reset, I don't know if I said sentiment, but yeah, you need people being kind of like, ooh, I think it's over. And that kind of scares people away before it's really going to run again. Because sentiment's kind of it's a healthy gauge. Like if people are really, really giddy and bullish, like they have been, like almost to the extreme, it's kind of a sign like, okay, we're probably due for some kind of event that resets that, and then we'll have more room to run on the next leg, right? But one more thing, sorry, just to touch on volatility is I've never seen silver is volatile by nature. We know that, like it usually moves like 2 to 3 times more than gold up and down, but I've never seeing the volatility that we have in the last couple of months. Like just this week, up 10% Monday, down 10% Tuesday, up 10% Wednesday, down 10% Thursday, and then down 30% on Friday. This is unnatural, although it's a tendency of silver to be very spiky and volatile, and that's actually a big benefit at this stage in the bull market. It actually helps us, but it's just there's some other stuff going on with like price suppression and the West and the COMEX trying to really keep the price of silver down. And we can get into that, not to get too technical, but yeah, I think the volatility now just it's going to have to come with the territory. You need to be prepared that it's going to be like this probably until we get into those bigger numbers, and even in those bigger numbers, 300 to 500, where I think we end up in the next couple of years. You'll see probably $30, $50 swings at some point, right? So it just comes with the territory, and I want everyone to be assured, like it's still big term, big picture, big bull trend, right? So we just need to keep that in mind and keep like our eyes on the prize, if you will.
And so you mentioned the COMEX and Shanghai Gold Exchange, and this is something that I've tried my best to cover extensively in ways that make it easy to understand, because it's complicated. I think it's intentionally done that way, but to try to simplify how I understand it is that you have the West, the kind of Western banking system, which really goes back in many ways to the City of London, to a lot of those old families, right? We're not going to get into all that kind of stuff, but you can see there's a very centralized Western wealth, and that they have between the COMEX and the LBMA, the COMEX being, as far as I understand, well, I'm not going to get into the details of it, but basically between those two markets, the COMEX and the LBMA, they're able to do all kinds of shady things with futures contracts and ETFs and paper, the paper silver, et cetera, where they can use that to control the price. And so when you load up, for instance, looking at Google, for instance, as just, silver price is $83 that it's currently sitting at. It's like, okay, what does that price represent? Because that is, in many ways, it's like that price is the price that's set by this very controlled paper market. But then if you look and you see, okay, well, how is silver being priced in China, right, in the Shanghai Gold Exchange, or in India, or in Japan? And I don't have the exact numbers, but the last I saw, the Shanghai price was up well over $100, 120 or so. And so you get these massive spreads of happening where the Shanghai represents, I think, real physical demand, because like they're not buying paper, right? They're buying.
That's right.
Like if Eric Young, who I've interviewed a handful of times, he's showing these videos of people over in China and Hong Kong. Oh, he's great. And it'll be a video of this guy taking delivery of, 10,000 ounces of silver in kilo bars or whatever it is. And so kind of how I understand this is that what it seems like what's happening with this volatility is that there's like this tug of war happening, and that what's happening is that the East, primarily China and a lot of the BRICS nations, et cetera, but we'll use China. China's on one side of it, and they're trying to pull all this silver in. As they pull it in, it's driving up the physical price. Yet you have these Western banks, JP Morgan being one of the main ones, that they have for decades suppressed these metal prices very intentionally through very underhanded means, which most of us are very well aware of that. So it's like they're trying to pull that price back down because a lot of them have short positions. It's not good for them. And so it's like you have China pulling it up, then the paper system pulling it back down, or pulling and pulling and pulling, and eventually it breaks, right? And I think that's what we're seeing happen now, whereas it used to be that you wouldn't see more than like a 2 or 3% difference between the COMEX price and the Shanghai price because of arbitrage. It's like, okay, if you can buy silver for $40 an ounce in America and sell it for $55 an ounce in China, people will very quickly close that gap because they're going to buy it and move it over and sell it. But I think that what's happening is it seems like that whole system is now breaking, and that's what, like, the volatility that we're seeing. It's the sign of, it's like a dying beast, and it's like last breaths. It's kind of thrashing out violently as it's dying. That's what it feels like we're witnessing here. What do you think, man?
I totally agree. It's a really popular thing for me to reference right now to kind of put things in perspective. So when people look at the spot price online, and obviously that's set by the COMEX, and they go, I'd like to buy an ounce of silver for $83. And I have to always say, like, hey, that's like kind of a paper price, right? Like to put an ounce of actual silver in your hands is a little bit more. There's fabrication that we pay for, and it's called a premium, right? Like you pay a little bit over. But I say, you know what people are paying for an ounce of silver in China? Like you said, 130 the other day. Like right now, I don't know what it is either, but the volatility that we've seen is only in the Western market. It's not actually on the Shanghai. Not to say it goes up every day, but it's not moving 10% up and 10% down, right? The only market bullion exchanges having that volatility is the COMEX. And it's like you say, it's like there's something going on, and they are flushing paper silver. They're dumping the price by selling paper contracts. And yeah, they like that is a paper market. 99% of all the trades on the COMEX just settle for cash. Now more than ever, you're having these requests for people to stand for delivery, and they just don't have the metal there. So they'll force majeure at some point, and it's basically an admission they don't have the silver. And allegedly, it's like 300 times the amount of silver that they actually have is what they trade on paper, right? So it's like what I try to, again, I'm not the best person to talk to for technicals, but I try to explain it in simple terms that I think helps people understand. If you own a house, you shouldn't be able to sell your house 300 times in order to drive the average house price on your street down. Like you can't do that. You can only sell it one time. And if everyone's selling it, it goes down. That makes sense. But you shouldn't be able to sell your house on paper 300 times to drive your street average home price down. Shanghai's gold exchange is a physical settlement exchange, right? So it's actually just they deliver the metal that they have for the buyers that want it. Here again, it's mostly just a big game. It's like a house of cards, and it is crumbling. The disparity between the price as of today, and again, like we've seen silver drop by 20, whatever, 30% today. The difference between the spot price on the COMEX and the silver price on the Shanghai Gold Exchange is like a 60% premium I've heard and seen today. So a 60% gap in the price, like the only way to explain that is like we're just flushing the price on paper. I think the equivalent amount of silver that's been sold today is like almost a year's worth of mining supply. There's no way that that's exchanging hands, right? So it's it's something to be aware of. I think the system's breaking, but the last 50 years, Seth, we've had, the market for silver dominated by paper contracts. You mentioned, China versus the US. It's almost like this big game of risk that's being played. It's like a war, but not kinetic. Essentially it's a who can acquire the most strategic assets and commodities globally. And they've been beating us in that department for, I think, decades, and we've only realized now. So all the rare earths, all the oil, all the gold and silver, all that stuff's getting gobbled up. And it's kind of a race now who can get the most of it. And yeah, we're seeing, the arbitrage opportunity. It hasn't closed this gap that's been so wide for so long, but I think it is still resulting in probably a lot of metal getting sucked up and delivered over there. That's going to hurt us longer term. So yeah, there's so many interesting elements going on, but what I think is important is that we still are a few phases behind where the East is. Like the East is further along in this cycle, and culturally, they have a better understanding and appreciation for actual gold and silver being regarded as money, whereas we just still see them as like shiny rocks. Why do we need to own it? That'll change. And I'd like to talk about some of the stuff I'm seeing and like total ownership of metals in American portfolios and old reference points and baselines that I think we'll get to, which is it's bullish for where we are, but they just know that this stuff is what you need to have, and they're willing to pay like almost any price for it. And so the ounce of silver over there is way higher than what they want you to believe it is here. It is not. Like there's two realities right now. We're all going to one new reality, but as you say, like no one wants to lose control of all the manipulation and the system that's really been um, dominant for so many years. Like it's not going to go out without a fight, and we're just seeing that now. That's what explains this volatility and all the other stuff we're seeing too. So very interesting times, man.
It's wild.
It is.
Here's a website, just goldsilver.ai, which is one of the few places I've seen that posts the Shanghai price. And so now this is saying last updated January 30th, which is obviously that's China time right now because it's still the 29th for us recording. But if you look here, it's showing that the Shanghai got up to 134. Let's see. Okay, 123. Right. So it's showing at the beginning of the day, Shanghai at 123. And you can see, and this is what's interesting, is that you're making the point here is that it's not nearly as volatile, right, as what's happening. Obviously, it's going up quickly because I think it's one of the drivers, but that's one of the things that I'm looking at is it's like for people, I'm seeing people saying, oh, silver's going back to 30. And I just don't see that happening at all. Now, I could see Bitcoin going to 30,000, right? It's like, it's had that kind of volatility before, but it's interesting because you can look at it and it's almost like because these prices have separated in certain ways, it's like, well, there's a certain floor that is there, right? Because they can't take silver to $30 an ounce using the paper if in China they're still paying $100 an ounce for it. Like the whole system breaks. And that's the thing, is that historically, whenever there's been paper prices and there's been the real commodity prices and there's been a divergence in them, the paper always ends up having to connect to the physical. It doesn't go the other way around because the physical is driven by real market energy and inertia.
Yeah,
real market forces drive the physical price, or it's this fake Ponzi manipulation that drives down the paper price. Now, there's one tweet that I want to pull up really quickly here. This is from Mike Adams, and this is from a little bit earlier today. I think he does a good job. Mike has a good understanding of this kind of information. I really have been following him on precious metals for years now. And he says, an incredible day of manipulated price plunges in gold and silver spot. It's being blamed on Trump's pick of Kevin Warsh as Fed chairman, but there's much more behind this move. It's a coordinated London, New York, Washington, D.C. paper attack to engineer volatility and try to cause a panic sell-off. What it really means, in my view, is a rare buying opportunity into metals that will keep trending higher as the dollar collapses and dollar debt explodes. The Shanghai price for physical silver is $123 an ounce. This indicates a $33 plus gap between Western paper markets and silver, which at the time of his post was at $90 an ounce versus Shanghai physical markets. It says, that's because Western governments can manipulate the paper price but can't print physical silver. Paper may plunge even more before the close of markets today, and this is an all-out assault on silver and gold, but none of this manipulation can generate more silver or increase silver mining output or reduce the need for silver in industrial processes. If you own silver, hold on tight. If you've been looking for an opportunity to acquire physical, there's plenty of silver supply on the buying side across most U.S. silver dealers. Smart people stack when the herd is panicking. This is one of those moments in my view. He says, not financial advice, right? Because he's kind of protecting himself there. But I really agree with what he's saying.
Could agree more. Yeah, me too. And I think that the fundamentals he's pointing out is something that's often overlooked. But we've been in a situation where the fundamentals for silver have been very bullish for a long time, but only recently it's actually kind of we're seeing now the price kind of catch up to the actual scarcity of the metal. But yeah, I think this is really like a fight to defend, and the intention of creating volatility through the kind of paper manipulation and the COMEX price and dumping all these contracts to really flush the silver price. That's all by design because they want people to look at this and go, I think I need some, I'm really interested. And, maybe they built up the courage to do that this week. And then they look at it and they go, oh my Lord, I do not want to be a part of that market. Like that is insane, right? I do not want to ever have to experience a 30% daily drawdown. it's unheard of almost in like any market. You wouldn't get that. So I think manipulation is extremely evident. I think the volatility is by design. I think that the idea that there's enough of this stuff to go around is completely false. He makes it again, like the mines haven't been producing enough of this stuff for a long, long time. You cannot just turn on silver supply. Like any kind of mining production expansion takes like 10 years. Most of the silver that's even mined comes from base metal mining, so nickel, zinc, copper, gold. Pure silver mines are very rare, some in Mexico and elsewhere, but like you can't just incentivize all the other base metal miners to mine more to try to find more silver. So there's no switch to just flick to get more silver out of the ground. And then investment demand's obviously up a lot. Industrial demand is up like crazy as well, as you know. So, on the supply and demand dynamics, like you couldn't have a more bullish situation. But price discovery is a process, right? It's not like just an event where they say, okay, like, the real price of an ounce of silver should be $500. It's not just going to happen overnight. We probably need years to resolve what an actual ounce of silver should be worth. I always tell people, this isn't a trade. Like physical metals are a buy and hold. Like there's a time and a place to own them, and we're already really, we're well into that period. There's still a lot of time left to buy, and if you don't already have some, you want to do it now. But it's something to hold for years, right? So I don't care about what happens today or next week or next month. I know that ultimately what's happening is like a once. Honestly, Seth, it sounds ridiculous, but it's like a once in a lifetime event where we're going to have a ridiculously important commodity to like human life and to the financial system at large. If 50, 60 years of price manipulation is finally ending, and we're going to have like supply and demand fundamentals actually kind of really get us to a point where people are going to say, what is an ounce of silver really worth in my hands? And that's at a much higher price, of course, but these things that are happening, again, it's like everything. Tell me what institution's not corrupt, and I'm sorry, like I just feel that way about everything. The commodity exchange is just part of that, and then the intention to have a coordinated attack. Of course, they would do that, right? So, it doesn't feel good for newer buyers. For those of us who've been here a long time, we know it's kind of to be expected. And when you work with us, and I don't want to make this a sales pitch in any way, but when you work with us, like all my clients kind of knew this was going to happen. Not today and not this much, but I've been saying for weeks, like, hey, we've doubled in the last 2 months, something like a 20, 30+% drawdowns due at some point, and that'll be constructive as we've said. But yeah, this is really like a massive arm wrestling match. It's East versus West. It's so many things combined, but it's really exciting if you know where this is going, right? I think it's really I was saying to my mother-in-law, who I got her in the fall to silver, and she stresses out a little bit. I'm like, it's better than like sports. Like you can't, like I'm watching the silver market right now and I'm like eating my popcorn, like, oh my gosh, this is so exciting. Every day is like, what? No way. And it's fun, but it's going to end up really well for us long term. This stuff is going to break, and we will get real price discovery. That's the point I'm trying to make.
Exactly. And one thing I'm curious with is that, you have a unique position to understand the buying sentiments and trends of just your average household collector, right? Or investor. It's easy to look at, the big bullion banks and the big, kind of family office, families and what they're doing and whatnot. But what are you seeing in terms of just typical Americans that have been groomed on the idea of 401k, stock market, stocks and bonds, and the people that are kind of waking up to this? Because I'm seeing, even within my own circles, people that I've been telling to buy silver since it was $20 an ounce are now saying, all right, okay, you got me. I'm going to buy some now. So
Is it too late?
Yeah, exactly.
Yeah.
And I'm still telling
Yeah.
them, I'm like, $100 an ounce feels really expensive right now, but if it gets to 300 an ounce by the end of the year, you're going to look back and say, gosh, I wish I would have bought more at 100, right? But
Yeah.
so what are you seeing though on your end?
For sure. And I love that you're asking because I want to share. It's really encouraging what I'm seeing. So a few things. One crazy stat is I'm selling more this month, January of 2026, than I did through January through September of last year. So I'm selling more this month than in the first 9 months of 2025.
Crazy.
Mind you, it was very slow in the like early days of post-Trump because nobody felt like we needed hedges anymore. But so you're kind of comparing like the worst time to the busiest time, but I'll sell more in 1 month than in 9 months of last year. So that's one thing. Two is 70% of all of my sales for the last several months are all repeat buyers. It's not new money. It's not a FOMO trade. It's not people who are like, oh, this is the flavor of the month. I want to, make money in this space. It's everybody who owns it at 20 and $30 who has done so well. They want more of it at 100 and 20, whatever the other day. So that to me should be one of the most bullish signals ever. If the people who own it from like, four multiples ago are buying it hand over fist still, that means there's a lot of room to run and it's not an overcrowded trade. There will be a time when like 90% of our sales is like all new money and new clients, and that'll be fine, but that'll be more indicative that we're near a top than where we are now. Like if, again, people who own it for 5 years ago at way lower prices, if that's the bulk of my business right now, then that's a really good sign. Overall, in terms of like, allocation to gold and silver, and this includes like mining stocks and ETFs and all the physical metals and everything, like all of the precious metals complex together in terms of what it represents in American portfolios is about half of 1%. It's like nothing. There's nothing there. 70% is in stock, the highest concentration in stocks of all time. And stocks, yeah, look, they've done really well the last few years. Most people are pretty content with their 401ks and their IRAs, and still most people are not thinking about gold and silver. They're just happy with the statements they get every month or quarter, showing them like they're pretty much at all-time highs. But what's concerning about the stock market is it has ripped like the last 3 years, 20+% gains. Statistically, you don't think that there could be much in the way of like double-digit gains in the next few years. And actually, a lot of people say you probably have a negative return over the next 10 because of the outperformance. We'll see. Like you mentioned earlier, Trump just appointed Warsh to the Fed chair. And I've been saying for months, like Trump will only choose who the most accommodative chair will be, who's going to cut rates like crazy and print the dollar like crazy. And people are saying, oh, the crash in the markets today is because of Warsh. That's one of the most bullish things for gold and silver going today is that they just appointed a Fed chair who's just going to cut rates to almost zero, and they're going to do that. I'm going to try to get too political here, but to keep the stock market going, that was the point of bringing it up. It's just churning, hasn't really done anything for the last several months, and could be a topping process. I don't expect any crazy crashes, but I don't think it's going anywhere for at least the year. But that's why we still haven't seen huge inflows from new money, because it might be in limbo, but it's still kind of floating around all-time highs. Traditionally, what you expect is to see something like before a precious metals bull market will complete, you want to see something like 3 to 5% total allocation, okay, to metals. Um, there have been points in the past, like 1980, where you're like sitting around 10% of total global portfolios have 10% allocation to gold. Morgan Stanley a couple of months ago suggested the new portfolio for like, whatever is coming, like the next 20 years should be 20% gold, 20% bonds, 60% stock. Well, if we get anywhere near that, we need much higher gold and silver prices. So, my nature is to be pretty conservative in terms of like my projections and expectations. When we see from half of 1%, so 0.5, when we get closer to 3 to 5, then I'll think we're, maybe closer to the top two, but that's a 6 to 10 times multiple in terms of the amount of money that has to flow into this space. So when we eventually have a stock market crash, and I think we will at some point, just 70%, or sorry, of 70% that's in stock, we only need 3 to 5% to come into the metals to 10 times the price of gold and silver from here, or to increase the market cap by 10 times. So I think it's inevitable. It's just a matter of time. But again, that's extremely bullish. If the price of gold and the price of silver are all the way up here, If most of my business as an actual precious metals dealer is still all repeat business and not new money, and we have yet to have an actual capital rotation event where people are moving out of like stocks to come and seek this shelter and the safety of physical gold and silver, that still just says to me we have like a long way to go. And we can talk price projections if you want, but I just tell people like we're nowhere near the top. So that I think is all pretty interesting stuff, just as like my experience has been. And like I said, it just makes me feel good about where we're at.
Yes, in terms of projections, I'd love to get your thoughts on that because it's not an easy question to answer. And I've asked, some pretty serious people like David Jensen or Eric Young or, what their ideas were. And, one of the responses I see oftentimes is, well, you can't really measure something with a broken yardstick or a broken ruler. And so if you look at what's happening with the dollar and how much the dollar's down, and even Trump coming out and kind of saying like, yeah, our dollar is going down, that's a good thing, which from some perspective does make sense. I mean, if you have a weaker dollar means it's easier for other countries to buy US goods or more affordable. Like a strong dollar actually hurts us a lot internationally with trade because it's like, oh, okay, well, the dollar is so strong, I can't afford their products, so I'm going to buy them from Thailand or whatever. So I think there's an idea of why Trump wants a weaker dollar. But in terms of like where the silver price goes to, it's like, well, say silver's at $1,000 an ounce, but that's reflective of the dollar dropping that much in value. That's not really a good thing either, because I mean, it's a good thing for silver holders, but it's also showing that hyperinflation is really kind of kicking off. Like if you look at charts of what happened in the Weimar Republic, where you had, gold and silver say a gold, being cost, say however many marks, right? So hypothetically, an ounce of gold was 1,000 marks. And then the next year, an ounce of gold was, 1,000,000 marks, right? It's almost like what happens when you look at that and it's like, oh, how much is an ounce of silver now? And it's like, oh, an ounce of silver is $100,000, right? Is it because it's worth $100,000 or because the dollar has just gone that far down? And so it's so hard to measure it. But I remember, a couple of years back hearing that Cliff High, he was always talking about $600 silver. And it seemed so wild when silver was at $20 an ounce, and it'd be like 23, 20, 18, 20. It's like 600 silver. But if you look at where it's at now, it's like even a lot of the big banks are coming out and saying, yeah, it could be over 300 by this time this year or whatever. So where do you see it going? I know it's so hard to look at it, but
For
what are your
sure.
thoughts?
Yeah. So I think like you say, and I'll do my best here, and the there's the fun stuff in terms of where could this go and how much money am I going to make, and we're going to talk about that. But the first part I want to talk about is like it doesn't really matter what it costs or what price it is because it's relative depending on the strength of your currency. In Zimbabwe, they have like $1 trillion note, and I think it buys you a beer. Okay, like it doesn't really matter. Like an ounce of silver is an ounce of silver. It was 100 years ago. It will be in another 100. The unit of measurement though is like kind of a relative, like you say, like a yardstick. So the US dollar will trend down. It has to. But the idea that the metals will never go to zero is actually like universal, right? So it's always like a store of value. Basically, it's going to protect that no matter what. So when I say to people like, hey, you need insurance for your house, for your car, you want to get it before you actually need it. Like you have to have your insurance before it starts to rain, or before you hit another a telephone pole or something with your car. You have to have insurance before the crisis happens, and you're hoping you never really need it. Like you don't buy car insurance hoping you're going to have an accident. You just you have to have it. And that's what I say to people is like, you need this stuff, at least some of it. Like you have to have at least a small amount of your wealth that's in a non-dollar denominated asset, right? And that's for these crazy nightmare scenarios where you wake up and the dollar's worthless, no one will accept them, you can't use them. Like the reason that in hyperinflationary scenarios like Weimar Germany or Zimbabwe or Lebanon or Turkey, that people don't want banknotes that are hyperinflating is because like if I can't sell you something today for that cash, that I can't replace that item with tomorrow because the rate of inflation or the rate of its devaluation is so high. That's why people are like, I don't want to sell you this chicken for 20 bucks because tomorrow I can't replace that chicken for 20 bucks because the rate is too quickly. And that's why in Weimar Germany, people would get paid on a Friday and you spend all your money that day because on Saturday morning, it's not worth as much. So like, I don't care what the price of silver gets to. It could be, $1 billion, but if it's like, because the dollar's actually down to zero, it doesn't matter. So think of it as like, the unit of measurement will at some point change, but the value intrinsically of gold and silver never will. And that's why you have this like currency cycle that, over all of Western civilization, it just repeats and repeats. Is you start with physical metals being regarded as money, and then it becomes inconvenient to somebody, so they don't want to actually exchange in that anymore, but they have it on reserve, and you have a piece of paper that you can trade as a receipt or something that's redeemable. And then, they take the backing of that note away and it's just a piece of paper, and then they print the paper into oblivion. And then once they ruin that, they realize they have to come all the way back to like square one. So that cycle occurs, like the monetary life cycle goes round and around. We just haven't really gotten, the Western world hasn't had any hyperinflation. And maybe we never do. And maybe it's not, maybe it's not 5 years away, it's 50 years away. I don't know. But I definitely want to have, again, always a good chunk of my wealth in a non-dollar denominated asset and a commodity and a monetary metal that's universally money. So that part, it's like, I don't care what price it is. And it's like, whether it was yesterday at 100 and something or today at 84, if you don't have some, buy it, don't wait. On the price side, there's a few ways of looking at it. Like one of my favorite guys, Michael Oliver, who looks at technical analysis, but also has a kind of a patented system. It's called momentum structural analysis. He has a lot of really cool spread charts to look at it. And I tell people a few things. Like, I think at this rate, things are moving very quickly. Of course, we wish we could go back to $20 and $30 silver or $2,000 gold. It's not too late. There's a lot of runway left. I try to be really conservative with my clients. Like, what I think will happen is at the very least, we get to $10,000 in gold. Okay, we're around 5,000 today. That means it has to double. Well, it's more than doubled in the last year. I'm only really expecting it to have to double again in the next, let's say, 2, 3. The odds of it going much, much higher are pretty good, but I like to again say, like, my minimum target for gold's 10 grand from 5, so you can double your money there. But again, it's not really about how much money you'll make. It's about having the insurance that you need, right? Just get it. And then there are a few ways of looking at how silver could, how things could play out with silver, because traditionally, as a precious metal cycle matures, what happens is you end up with, again, the typical behavior is gold leads the trend. It leads and it goes up in price for the first half of the bull market. And we saw that, right? We saw that the last couple of years, all these new nominal highs for gold. Silver's just still all the way down here. People are going, what the heck? And I said, look, this is just normal behavior. Silver acts later, but then it has an absolutely massive catch-up move, and it always outperforms. There's no exception to silver's outperformance. And when it outperforms relative to gold's price, you end up with this gold to silver ratio dropping. And at one point last year, Seth, we were at 100 to 1. It was in May.
Oh, it was
so
crazy,
it was like,
wasn't it? Looking at that it was like
insane. Yeah,
say 25 bucks for silver to 2,500 for gold, right? Something
it was
like
at
that.
34. Yeah, it was 3,400 in gold, and it was $34 for silver. And at that point, I was telling everybody, like, hey, keep some, but sell a lot of gold here to buy your silver, buy more silver, because it's a very unique opportunity to kind of be in this super high range that suggests that silver is extremely undervalued. Well, since that time last May, I haven't checked today, but we're like in the 40s. So we went from 100 ounces of silver being equal to the price of 1 ounce of gold to now only 40 ounces of silver is equal to the price of 1 ounce of gold, which means the silver price has more than doubled versus gold in the last little bit. Now, what's typical of a precious metals bull market is you'll have the gold to silver ratio drop like a rock as silver explodes. And like in 2011, after the global financial crisis, when everyone rushed into this space, we got to a 30 to 1. Okay, so what I say to people is, like with that floor and ceiling concept, Seth, like we will very likely go and retest the previous low on the gold to silver ratio around 30 to 1. So if I'm right about 10K gold, run the math, like back of a napkin, it's $330 silver. So that to me, it's a conservative gold price and it's a conservative gold to silver ratio target. Now, what if you keep your conservative gold price at 10 grand, but you think we're going to a 20 to 1, which I actually think is very achievable, but maybe a little bit more of a stretch goal. I think 20 to 1 will happen. That's $500 silver. So, that absolutely is within the cards, but what if it's 15 grand for gold? What if it's 25 grand for gold, right? So you could kind of do a little bit of a matrix on your own, like the price in gold that you expect, the GSR that you expect in silver, and then what that would equal. So I tell everybody over the next couple of years, like, yeah, 10K gold, 300 silver, you could pretty much bank on it, but it's not going to happen in a straight line. And days like today are a great example of that. So keep in mind, again, it's insurance, but you're also going to make a boatload of money in this space. And there's a time and a place to own precious metals. It's like, we're right in it. But what's awesome about it, and I tell this again to people every day, is if you can bring me another investment idea that'll do as well as gold and silver for the next few years that also have zero risk, bring it to me because I'll have a look. But like no one's been able to do it. Like if you can find me a market that could double or more in the next couple of years with zero risk, like I'm all ears. But I really think this is the only asset class that could even come anywhere close to that.
No, it is. And I think also kind of in wrapping up, just kind of giving how I look at, precious metals. I'm not a stock market guy. I've got a little bit in some mining stocks, but not much.
Me
And,
too. Yeah.
My perspective is that, like I always keep this 10-ounce bar sitting on my desk. It's this little, kind of fun poured 10-ounce little bar here. It's always sitting
I have
there.
I have a rail spike. My dad worked for the railroad, so this is a 10-ounce silver rail spike that
Yeah,
keeps me humble, humble roots.
exactly. And so actually, I paid 25 an ounce for this. So at one point, this thing was, 250
250
bucks,
bucks.
right?
They're
Now
like almost $1,000 now.
yeah.
Yeah, exactly.
And so kind of the way I look at it is that I don't buy silver, right? I convert my assets from dollars to silver. Like I'm not purchasing silver the same way I would purchase a new lawnmower or even a stock, right? I look at it as just it is a store of wealth. And so my philosophy is that because I'm a business owner and I've got a few different businesses kind of going on, that if I have a month where I have a little bit extra that comes in, I move it to silver. It doesn't matter what silver is at. It's just out of principle. Like I make sure that I keep in my cash accounts just what it takes to make sure my family's safe and a little bit of backup. But other than that, though, like silver is my savings account. Like silver is my IRA, right? It's what I just take anything that I have excess that is excess. I can't think of anything safer to put it into because I would feel nervous if all my money was sitting on some sort of, kind of bank login on my phone. Like I wouldn't feel comfortable with that because I'm thinking, okay, what's going to happen if I lose access to that? What happens if the government comes after me for some reason? I don't trust that, but I trust this. So anyways, that's my philosophy in terms of why I buy silver.
Very similar to mine, if I can share quickly. Like, I don't recommend this for the average person, but I'm all in on this, and I have been for almost
Me
10
too.
years. And people are like, "Oh, yeah, of course you want me to buy the metals. You're a sales guy." I'm like, "Well, I'm an investor first, right? Like I've been buying for almost 10, working here for 5. So I have like of my total net worth, 100% exposure to precious metals. Again, not financial advice. This is just because I'm so committed and convinced that what's happening is, well, it's actually finally happening. But I keep 80 to 90% of that in physical. And I do have like some mining shares and some stuff that I'll do where I have paper exposure to the asset class. And, you can get some decent returns in that, but anytime it grows more than that 10 or 20%, it's trimmed and it's stored forever in physical. And I've absolutely zero risk that I'm ever taking with a big bulk. So the stock market, the lights could turn off tomorrow and I could lose 10%, but I can actually still go and put my hands on the rest of my wealth. And again, this focus on possession is 9/10 of the law. We don't want paper silver. We want physical silver, like that trend that we'll see continue and get even more aggressive, like with East versus West and this acquisition kind of war that I talked about. You yourself, as an individual, need to be sovereign in the sense that you have like a part of your wealth that you can go and put your hands on and you have it physically. We never hope that the grid goes down or whatever happens, but you can always use gold and silver as money because they always have been, always will be. But yeah, I only keep enough in my kind of checking account to clear expenses every month, and everything else, boom, save long term. So similar strategy. I'm not telling anyone to go as crazy as I am. I'm not a great role model that way, but you do just need some. It's a bit of an insurance policy. So um, I'd love to have these conversations, not just with you, and I really want to appreciate like you having me on again. I'm kind of starstruck. Like you have Colin on, my boss, who's the best. But it's nice to finally get to talk to you. I've been dealing with, again, with your audience and my clients that come from your channel for years. And even just before jumping on today, I was able to get a couple dip buyers from your platform to come in and actually finally, or not finally, but take advantage of the opportunity that we have today. And that's what I would, again, just underscore is that's what this is. We talked about the volatility. We talked about the paper suppression. That stuff's going to continue, but keep your eyes on the prize, protect yourself. We all need insurance. If you want to talk to me or any of my awesome colleagues, we're, again, not salespeople, we're investors. We walk the walk, talk the talk, and just rolling over an IRA is super simple. People kind of put it off because they think it's complicated. It's super simple, and we get them done all the time. And home delivery purchases, we do too, super simple. So anybody can give me a call, or any of us at Noble Gold, and I again appreciate you bringing me on, man.
Oh,
Anything else you
absolutely.
want to wrap up with?
No, I think just in kind of, yeah, I guess wrapping up and just saying that, you know, what you do is very different. I've also been in this space. I was in the jewelry industry back as early as 2010, and I had an auction house. I was doing, taking kind of like high end rare stones and jewelry over to Asia and selling it to private clients in Hong Kong, and did some fun stuff. Then I had a gold buying business. Where I was actually just buying scrap. I think actually that's where this came from. I think I bought it just over, and I had a little office in Ohio, right? It was, and people would come in
Cool.
with estates and diamonds, and I would just sort through it and I'd buy it. So I love this space, but I think what's really unique is that like what you do, like people can literally come after this interview, they see it, they can talk to you, and you become their personal advisor, right? And you're looking and saying, hey, now's a good time. The ratios are right. Let's move some of your silver back over to gold and just kind of ride that for a little bit. Or anything you're saying, even you're saying right now is a dip, right? I saw when it hit down to 75, I was thinking, should I buy? Should I buy some more? And I almost did. I had an opportunity to buy, I think it was, 300 ounces or something like that at, 78 or something. And I thought, should I do it? Should I do it? And then I just got busy and I was like, okay, just calm down, Seth. But that's the key, is that people can talk to you and you're advising them. But also, there's a lot of fake stuff out there. I've seen a lot of things of even stuff like this, or these big Inglehart bars, these big 100-ounce bars, people cutting them in
Yeah,
half,
the
and they've got,
plated
it's
tungsten.
terrible. And so that's the other thing
Yeah.
too, is that your local coin shop, they might just be doing really basic tests and they may not know, not because they're dishonest, but like I used to be the one buying this stuff, and it's really hard
You
unless
need
you've got
a quick
really
turnaround.
expensive. Yep. And
Yeah.
so you just have to be careful. And that's what I like about you guys, is that you're bullion dealers, right? You guys have major accounts, major inflows of, coming from mints at 0.999% pure,
Yeah.
guaranteed, and it's
Yeah.
available. So it's just, there's a lot of strength and confidence that I have in you and your company.
Thank you. Yeah, I just want to jump in. Like, we're hearing all these crazy delays from all these dealers, and they're having a hard time sourcing it. And like, yeah, things are getting a little bit tight here, but yeah, we're a premier. Like, no one believes me when I say it, but we are the best bullion dealer in the country. And we have the best service. We've got the most transparent vaulted. We've got the best delivery. We have everything, and the best like people. Like you said, like I'm an investor. I can't really tell people like, hey, you have to buy, hey, you have to sell, because everyone's got to make their own decisions. But what's nice is when my clients call me and say, like, what are you up to? And I reach out proactively as well and say, hey, look, I'm making some adjustments to my portfolio. You might consider the same. Like last year at 100 to 1 for the GSR, I was selling gold and buying silver, and a lot of others followed my lead. lead. So yeah, like this is a multi-year buy and hold. You want to have someone that you can count on. All of my colleagues and I just will give you our best advice throughout that. And you want to have someone that you can count on for the life of your account. It's not just like, you buy it and then you don't know what to do with it for years and you got to figure out when to sell. Again, we won't tell you when to, but we will do our best to create a bit of a roadmap and an understanding. So when days like today happen, you're not like thrown off and thinking that you got to get out of this and that it's over. It's not. So just reach out to any of us, and we're moving. Like I said, like I'm selling more this month than all through the first 9 months of last year, but we're still moving as a company like tens of millions every month. We still have lots of access. We get preferred access to supply nationally because we work so well with all the different suppliers and stuff, where we move so much metal for our clients, and we get the best cost because we're moving so much as well. One thing we don't do is overcharge like a lot of other companies, and I would say like the big guys you see the big advertising campaigns for all the time, they make the most money because they charge the most, but they're not actually the best. We prefer to work with like-minded people and channels like yourself, where we can actually really bond and connect with the audience, and we're kind of like already on the same page, really getting off to the races and on the right feet together. So yeah, give me a call, like anything you want, anything you need. My team and I are looking forward to helping you guys through the rest of this bull market and the very exciting times that we have ahead. So thanks, Seth, for having me on.
Oh, absolutely.
And I hope we can do it again. Yeah.
Yeah, I'm sure we will. I'll pull up, this is, if you go to goldwithseth.com, and this information is also in the show description, there's the phone number, 877-646-5347. You can also fill out that form. You can call in and say, hey, I want to talk to Micah. I just saw this interview with him, and there might be a line. You probably have a lot of messages, and I appreciate, even on a day like today, that you're doing this show with me, because I'm sure you're going to have 30 voicemail messages as soon as you hop off, with a lot of things to do. Hopefully it's people saying, hey man, I'm buying more, buy the dip. But
it's 11. I'm looking at my voicemail right now. I have 11 since we started this call.
Yeah.
So yeah, it'll be busy, but yeah, no, it's great.
Yeah.
Call me and ask for me. We'll still get back to you. Yeah,
exactly. And that's the thing, is that's why, like, I have so many gold dealers coming to me and saying, hey, we want to sponsor your show. We want to work with you. We're going to give you these really good deals on things. And it's like, nope. Like, I've vetted you. I know what the industry is like. There's a lot of sharks out there. You're not the cheapest, but that's a problem if you are, because it's a commodity. If someone's saying, hey, we can get you for $5 under spot, there's a problem there, right? You're the fairest. Yeah. And that's what I've seen. You're fair and you're transparent. And that is the most important you can hope for. Don't look for deals. Don't look for that like little pressure of like, hey, I got a last minute deal for you. You want someone that is trustworthy and reliable. And that's what you guys are. That's why even my mom, I send your guys' way. So.
Yeah. No, I say price is what you pay, value is what you get. It's not just the product, it's everything else that goes with it. So absolutely. And let's just keep it going. Appreciate coming on, and thank you very much, Seth. So all the best to you and your audience, and we'll be here to help anyone that wants to reach out.
Awesome. Thanks, Micah. All right, so I hope that was a helpful discussion for you. Before I let you go, I have one more thing to tell you. So obviously here in America and a lot of places, you're seeing that there's insane stuff happening in the world with the weather, with natural disasters. We just come off of a major ice storm that left millions without power. There's been deaths. It's really not fun to watch this happening. But one thing it showed me is that a lot of Americans aren't nearly as prepared as they think they are. But it's not easy, because there's so many different areas that you have to be prepared for. You might have a lot of food and guns and ammo and gardens and everything, but if you don't have your water set up in place or the right kind of power to heat your home, you're very vulnerable. And so as part of my big mission this year is to truly try to help more people be more prepared, I actually put together this free quiz for you. So it's free. There's no cost to it. If you go to readyscore.com, just readyscore.com, we condense it down. It's about a 90-second quiz. There's 11 questions. So you go through these basic questions, and what it does is it helps you to assess and define what gaps you have in your preparedness. So if you haven't done it yet, go to readyscore.com. Just click on this button here. You click on that, and then it goes into your quiz, right? is kind of asks you through, and you can see, okay, you click on which ones. Actually, I'll walk it through real quick. Okay, let me just go through and just kind of pretend that I'm you and I'm taking the quiz. You can see that it goes through. Okay, and you kind of finish your quiz. You have the option to take an even more detailed quiz. Again, it's still free, or you get your results. So you throw in your name there, Seth at seth.com. We'll kind of just see my results. You go in there, and it actually then pumps out, it gives you your exact ready score. And this is really, really helpful because it helps you think, maybe you think you're really prepared and you're like, oh my gosh, I'm only a 49. What's that mean? So it actually goes in and it shows you in every category, right? It shows you exactly where your strengths are and where your weaknesses are. And so you can really very thoroughly understand what needs to be done. And at the bottom, it actually puts together a priority action plan for you. So it'll show you, okay, hey, here's 3 things that you can do in the next week to really take your preparedness to the next level. You can also take that full assessment if you want to, which again will take maybe 6 or 7 minutes. It's also free if you want more detailed information about that. But then what's cool is that in a couple of weeks, you come back in here, you can retake it and you can see how your score has changed. And so this is one of my missions, is to get as many of the Man in America audience and hopefully beyond that at a place where we're consistently hitting a 60, 70 plus ready score. I took it, I think I'm around a 75. I definitely still have some gaps or where I need to improve. But again, just go take it. There's the short quiz will take you 90 seconds, even faster if you're kind of buzzing through it. So again, that's readyscore.com. It's a free thing because honestly, I want you and your family to be safe whatever happens, whether it's a hurricane, whether it's a pandemic or shutdowns or a grid down scenario. This is designed to help you identify exactly where you need to focus your preparations. And a lot of times it's actually these really easy things that you can do